Wheat futures were higher. Short covering is the best explanation, but spring wheat crop conditions did decline. Corn and soybean futures were lower, and so was soybean oil, and bean meal worked higher. Fed cattle were mixed. Feeders liked the decline in corn prices, and lean hogs were mixed.
Live from the really excessively sunny side of the street via Farm Journal broadcast, this is Agri Talk. This afternoon we'll chat with Chris Robinson from Robinson Ag Marketing. Directly following the news, Matt Bennett from agmarket.net. I'm handsome newsman Davis Michelson, and now here's the host of Agri Talk, Chip Flory.
All right, Davis, how's it going, bud? Look, my app says heat advisory. Heat advisory out there.
Now that's a real pain in the app, isn't it?
It certainly is. 88 degrees out there right now. The feel like, it's 67%. The dew point temp is 75 degrees.
Let me see if I can get to the
it
field.
is a muggy son of a gun out there right now. So, and
we're 92
it's getting
here.
da.
Yeah.
That's that temperature I think is coming this way.
Mm-hmm.
The heat conversation is, do I dare say it? Okay.
No.
There's
Say
more
it.
and more people talking about heat.
It's boiling over.
It's
I'll say it.
thank you. But there's more and more conversation out there about what this heat might do to the corn crop going forward. This is one of the conversations that I want to have with Chris.
Mm-hmm.
You know, the expectations on the yield got so high. You go back to coming out of the 4th of July, and everybody just thought this thing was full steam ahead.
Mm-hmm.
And now we've punched it a couple of times. I'm not saying that we've taken huge bites out of the yield, but we've taken a couple of shots at it. And I just wonder what we have got factored into the market right now. So we'll talk about that today.
Well, and you know, like Ken Ferry always says, you never want corn to have a day like the Cubbies had last night. Am I right? As I recall, he says that quite often.
I've heard him say it a million times. Yes, I did. Yes, I have. Rest in peace, Ozzy Osbourne.
Yeah. Now, we didn't mention this yesterday. Theo Huxtable, Malcolm Jamal Warner, was reported dead yesterday, drowned in Costa Rica. That's 2.
Right.
My wife has a theory these things happen in 3s.
Well, I think she's
care
probably right. So that's 2.
No.
All right. Hey, let's go ahead and get to the markets.
Well, Chip, the U.S. dollar turned lower early this morning, and wheat futures seem to have responded with a move back to the upside. As the dollar extended losses, wheat futures rallied to spike resistance at last week's high. September winter wheat futures posted an upside reversal, and September spring wheat futures opened near session lows, matched yesterday's low, and then recovered to post a high range close. The spring wheat crop now rated 52% good to excellent, down 2 points from last week. Poor to very poor spring wheat is put at 16%. That's up 3 points on the week. Declining spring wheat conditions encouraged some short covering. September HRW wheat futures 7 1/2 cents higher today, 5.33 1/4. September soft red wheat up 7 1/4 cents to 5.49 1/2. September spring wheat closed at 5.91 3/4, up 5 1/4 cents. Chip.
I'm already looking forward to the August 12 crop production report because I'm starting to wonder just how enthusiastic spring wheat producers are for their crop. That'll be reflected in the farmer survey.
Well, the corn crop is rated 74% good to excellent. That's steady with week earlier. Corn rated poor to very poor increased 1 point on the week, but is still low at just 6%. Brazilian consulting firm Ag Rural says 55% of the safrinha corn crop has been harvested, but that's well behind last year's 82% pace, far enough along that hedge pressure on corn should begin to diminish. December corn opened slightly higher. Near session highs dropped through support at yesterday's low to post a low range close. September corn futures were 4 1/2 cents lower. $3.99 1/4. December corn down 4 1/4 cents to 4.18. March corn futures 4.35 3/4. That's down 4 cents today.
Yeah, knocking on the door of some serious support in that corn market right now. Some levels that have got to hold.
Well, Chip, it was a role reversal in the soy complex. Soybean meal traded higher and bean oil traded lower. Meal closed below session highs, putting some late session pressure on soybeans. USDA rates 68% of the bean crop in good to excellent condition. That's down 2 points on the week. Beans rated poor to very poor increased 2 points to 7%. The soy complex continues to feel the negative impact of stressed trade relations with China, but is finding support from U.S. biofuels policies. November soybeans opened higher and then dropped to spike support at yesterday's low before recovering to post a mid-range close. August beans were 4 3/4 lower at 10.10 1/4. Sept beans down 2.5, 10.08. November beans closed at 10.25 1/2. That's down just 1/2 penny, Chip.
Yeah, I got to believe that it was just a bit of a correction in the bean oil market here today. August down 44 points, 55.63. August bean meal up 3.30, 273.80.
Well, cotton crop condition ratings improved on the week, but short covering helped futures close higher. December cotton today 15 points higher, 68.25. Over to your livestocks. August fat cattle today 25 cents lower, 224.97 1/2. August feeders up 67 1/2 cents to 328.27 1/2. And August lean hog futures 40 cents higher, 107.75. Chip.
All right, let's get to Matt Bennett, agmarket.net. Hey, Matt, how's it going, man?
Going good. How are you, bud?
Doing real fine. How's the corn crop doing? How's the beans?
We were dry in June. Of course, we had a little bit of a late start. May planted corn, though, this year with all the heat that we've had and the moisture we've had. We're pollinated at this point mostly. I think some of it's maybe just finishing up. But we've been blessed with an incredible amount of rain in July. And to be honest, I'd say most of our farms have not had too much, so we've been kind of fortunate there. But the crop looks absolutely incredible. I mean, I've been all across the Midwest here in the last 2 weeks, and I haven't seen very many bad crops. I'll tell you that.
Yep. Yeah. It's hard to find a tough one out there. There's a pocket up here in northeast Iowa that's pretty rough, but for the most part, it looks good. Now, have you pulled any husks? We keep hearing about pollination issues.
Right. I mean, I'll tell you, yesterday I had my buddy, Mike Toohill was on our fundamental webinar with us. He probably walks as many fields as anybody out there. And he said, that he's not seeing as much of the issues as what the social media might lead us to believe. His biggest concern, actually, with all the moisture is disease pressure. Seeing a lot of southern rust. We're seeing anthracnose. We're seeing tar spot. And I know everyone's tight on cash right now. We all know that. This is a tough game we're playing. But tar spot, as we know, can take 50, 60 bushel an acre out of your corn crop. So with the environment we're in, he said, let's walk these fields, probably not going to see near the loss in yield, from this tassel wrap situation as what we will from disease if we don't address it appropriately.
That's right. And the southern rust isn't far behind tar spot on the damage that it can do. And
you're not kidding. It's devastating.
It is. And it seems like we've got that at, 3 weeks earlier than what than what we would normally expect it. So we got to watch it. Matt, good stuff, buddy. Thank you.
Yeah, have a great one, bud.
You bet. Matt Bennett, agmarket.net. Okay, there's a lot of talk about it, but is it having any impact on the markets? These concerns about the corn crop. We'll discuss it with Chris Robinson next.
Agri Talk is brought to you by FBN Finance, helping family farms through tough times with land loan rates as low as 5.51% for well-qualified borrowers. Rates subject to credit approval and may vary. Visit fbn.com/agritalk.
All this crop talk, we need to remind people about the Farm Journal Yield Academy. Mm-hmm. Ken Ferry is having his corn college right now. But he is going to be at the Farm Journal Yield Academy coming up on August 21st in Rochester, Minnesota. That's the same day as we will wrap up Crop Tour and have the Crop Tour meeting that night. Ken's going to be there. David Hula, Randy Dowdy, Machinery Pete, Casey Seymour, Shay Folk, Dan Bossy. Go to farmjournalyieldacademy.com, and in the promo code, use Agri Talk, and you can get signed up for half the cost. So be sure to do that. Be sure to do that. All right, let's get to the conversation with Chris Robinson, Robinson Ag Marketing. How you doing, Chris?
Hey, Chip. Good to be here. How you doing, brother?
Doing real fine. Good to see you. Good to talk with you again.
Yeah, good to be here.
So, all right. What messages are you getting from the market right now?
I feel like we're at a seance. The market's telling you that it's pricing a big corn crop, and every time we've tried to turn it around on technicals or anything else, really, I think after that July 4th weekend when we gapped open lower that Sunday night, that's been the last hurdle that we've had. It's been on one of those situations. I know me personally, I kept thinking, is this going to be like 2012 or big crop, no problems, and then we get we got the weather issue. We just didn't get a weather issue this year. We don't have it yet. I know there are guys that have problems, but in general, nationwide, it's been, darn near perfect growing conditions. Yeah. And with the crop conditions that came out yesterday, the best crop conditions for this time of the year in 9 years. I mean, it's going to be a big old crop. That's the problem. And that's why we're fighting here at this $4.20 level, $4 level.
Yep. Last week, higher 4 of the 5 days last week. And I thought, okay, here we go.
Yeah.
But
buy your calls, right?
Yeah. All we got out of it was a 23 cent rally. That doesn't feel like much of a summer rally, Chris.
No, and if that's all we got, that's why, every day you have to make a decision, right? What are we doing? What are we doing? And, if I told you in the beginning of the year we were going to peak out, 479 in April, you'd have thought I was nuts. And I think that, there's a statistic out there, which I'm going to share. I mean, I can't remember the last time was in 10 or 20 or 30 years where we didn't get one more trip up to the insurance price, the spring insurance price. Right. This is going to be unusual. If we don't get back up to that spring insurance price, which is 470, that's going to be a pretty rare item. Now, we've done it twice in beans. I think it was 1065 for beans. Yeah. But corn has just been under pressure, and, man, it's been very difficult.
470 feels like a mile away right now, doesn't it?
Yeah, absolutely. And then so now when we had the contract low there at 407.5, that's the level that it has to hold, right? The Maginot line, like this is World War I, we're in the trenches. So it's going to be a tough 6 weeks here. Now, I'm not saying we can't turn. I just keep, every time I turn around, like, what is going to turn us? What is going to turn it? Because even the funds, people say the funds this, the funds that, they're only short 175,000 contracts. They've got a lot of dry powder. They're not really even involved. Back in years, go back 10, 12 years ago, they would get 300, 400,000 on. They'd really get involved. Even the funds are staying away from this, which is kind of unusual. So we'll see. I'm not saying it can't happen. And I'm still not in that camp where I want to buy a put and sell 3 calls against it to pay for it, because that's exactly when the market will turn and chop your fingers off for doing that. So I think what you do is keep your powder dry, defend what you can, and hope that we get a move back up to, technically, if you ask me, where could we go? There's a big long-term trend line, 3 years old. If something really turned us, it tits us up to about 465, 470, which ironically is the spring price. So it's up there. The robots see it. We just need the kerosene on the fire.
Yeah. The robots also see that July 7 gap that you mentioned. And, it's going to be real. Let's see, the bottom of that gap is at 29 3/4. It's good. Yeah. That's going to be formidable resistance if we would get back up there, isn't it, Chris?
Yeah, they give us a head fake because last Friday we were finishing strong. Giddy up, here we go. And this is one of those years where they're making it very difficult to, stay optimistic. I mean, it's tough. It's tough. Now, I'm not saying we can't get something that will turn, but every time we turn around, they're kicking the can again on China trade talks.
Yep.
I don't think that's going to get done again. And So I think that the market is just, when it comes right down to it, at the end of the day, supply and demand is the thing that is driving this. And when you do the math, when you do all the acres that we planted, and if you do the possibility that we have, these hybrid, this seed technology kicks in. I mean, there are guys talking in Iowa where they're talking about 300 bushel corn in Iowa, so it's just been one of those things. So I keep your powder dry. I'd say, the market's letting you defend $4 corn here. So at least it's letting you do that. What you don't want to be is come harvest something, ridiculous if we're back down, 380, 370. So I think that you kind of have to be, this is kind of like MASH. Remember that TV show MASH where you're in it's triage, man. You've got to stop the bleeding. Stop the bleeding at $4 and hope that we get a trade situation where something catches here, because we're going to have a lot of corn if this market doesn't if we don't get a weather issue. Okay,
so USDA is working with that 181 for a national average corn yield. Obviously you believe that the market is trading something over that. What is it trading? I mean, I've seen some numbers that that today's price represents like a 187, something like that. What do you think the market's trading?
Yeah, well, the market's telling you that whatever it is, it's bigger than everybody anticipated. And again, I got to point this out. The funds really aren't even involved. 175,000 contracts isn't a lot, because I think that they're also waiting to see if we do get some issues. Now, just last week, people were talking about it was too hot at night. In certain areas, pollination wasn't going as well. We were talking about some of the tasseling had wrapped, things like that. So we all look at the same stuff, but I'm not going to go down that. I'm not going to step on that landmine and say what I think the yield's going to be. We'll find out what it is. I learned a long time ago. I learned a long time ago that what matters is what the market is letting you defend. And I put it in my letter this morning. I've been talking about it for the last week or so. That this is kind of like we're in worst case scenario. And the people that follow my program, I mean, believe it or not, we sold cash grain. We're about 20% sold, and our price was $470. Now, how did that happen? I held my nose back in February. It was like, okay, let's get something sold here. Corn has not given us a chance to do anything. That's the one thing. So I'm still holding out, possibly, in the next 6 weeks. Maybe if we get some issue in beans, I know there's some people talking about they think maybe beans have turned the corner here. We'll see technically. Maybe that's a situation where, some issue with the weather in August in beans can help drag corn back up. But between now and then, I think that the market's at least letting you, defend $4.10 or $4 and stop the bleeding. That's really, I think that would be my advice. Okay. Now, if I'm an end user, if I'm a big buyer of corn, they're daring you to go buy cheap calls, and that's the one thing I talk about. If you're an end user, it's very easy to do upside, very, very cheap calls here right now, which may pay off here if we get the story. Now, I don't know what the story is, but I think there's still that's a strategy there. If I'm an end user, I mean, look at meal. Meal's at 9-year lows, 10-year lows. Yeah. I mean, they're daring you to buy meal calls, So and it's like everything else. When meal turns, it'll just be like when cattle turns, right? When cattle turns, look out below. When meal finally turns, people will say, "Oh yeah, I knew it was coming." I think the hardest thing about markets like this is that you have to just stay disciplined and stay focused. And the nice thing is, back in 10, 12 years ago, you had to go out and buy very expensive hedges because you had to buy 60, 80, 90 days. Heck, now you can do stuff for the week. So there's the silver lining there. There's going to be an opportunity. Hopefully we can carve out a bottom here, but it's hard to put lipstick on this pig. Yeah.
We are in the middle of a conversation with Chris Robinson Ag Marketing. One of the things that we've kind of been skirting around in this conversation so far is the volatility and just the really low volatility that we're dealing with right now. I want to talk about what that might mean for this market going forward. And then we got to talk exports and demand. We'll do that next here on Agri Talk.
Let's go to the markets page at profarmer.com and check today's closes, where September hard red winter wheat futures were 7 1/2 cents higher at 5.33 1/4. September soft red wheat up 7 1/4 cents to 5.49 1/2. September corn futures were 4 1/2 cents lower at 3.99 1/4. December corn down 4 1/4 cents to 4.18. August soybean futures were 4 3/4 cents lower at 10.10 1/4. November beans closed at 10.25 1/2. That's down a half penny today. December cotton 15 points higher, 68.25. Over to your livestocks. August live cattle 25 cents lower today, 224.97 1/2. August feeders up 67 1/2 to 328.27 1/2, and August lean hogs 40 cents higher, 107.75. Try profarmer.com. Opinions expressed on Agri Talk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. You're listening to Agri Talk, where the conversation begins. Join us at 855-4-TALK-AG.
Welcome back to Agri Talk. I'm Chip. Glad that you're with us on this Tuesday afternoon for a conversation with Chris Robinson, Robinson Ag Marketing. So the low volatility that we've got, Chris, what does it mean? Does it make it more difficult to establish and prove a low when you've got low volatility?
We have low volatilities, and then we'll have days like we had last week. We'll get 4 days, and it looks like it's going to turn. You don't have a whole lot of outside financial interest in this right now, which I guess it's a good news, bad news, because if you had everybody and his brother wanting to trade commodities, would be even more volatile, right? Because you'd have more people that are just trading on emotions. So it does make it difficult. It's kind of getting back into the type of markets where they're grinding, right? So grinding, and then it moves, which are very, very, very hard for anybody. I don't care if you're bullish or you're bearish. It makes it very, very hard to make decisions, right? Because at the end of the day, It comes down to, are you willing to make a decision at this level? And actually what it does is it primes you to want to do nothing. And then that's even worse, because then you miss opportunities because you get disgusted, and it kind of feeds on itself. So, I started in this business, at the Board of Trade, I stood in the pit, I traded for myself. I wasn't a filling broker. And I know how hard it is if you're in a market that's very hard to trade. And, back when I was on the floor, if corn wasn't moving, you could go trade bonds. You could go do something else to get in a market that's moving. But it is absolutely positively hard to trade a market that's not moving, because you don't get an opportunity to make a move in the cash market. You don't get an opportunity for I don't care if you have puts or calls on, they're not working. So it makes it very, very difficult. The only saving grace is now with these shorter dated options, you can sort of titrate in how much you're going to spend on your protection. So you can do it a bit at a time.
Okay, you've mentioned them twice now, the short-dated options. How are you using those in risk management? Go into that a little bit.
Okay, well, with risk management, it comes down to, if you've got one side, you already have a one big bet. You bet one way. Risk management is just your hedge in case that moves against you. So, for instance, let's just say I'm not a farmer, but I was just somebody that said, you know what, I woke up 3 months ago and said I want to buy 600 contracts of corn. So I'm long, millions of bushels of corn. With futures, you would have had a hedge on, which is a put option to defend that long futures bet. So that's really, when somebody says we're risk management, that's what you're doing. You're spreading the risk to somebody else. And the instrument that you use, if you're long the physical commodity, is a put option. And that's, that's kind of basic risk management 101. So most brokers that are out there, they're always talking about puts, because that is your hedge if you're long and you haven't sold it. So it's a substitute sale. The nice thing with the put is, if you do set the floor, and then, let's use cattle, for instance. If you had been using a put, right, and then the cash price continues to blow up, well, you've lost money on your put, but you're participating in the cash market rally all the way up. That's basic, reason. So, and the shorter dated options, all shorter dated means is, you used to have to buy, 3, 4, 5 months at a time. Now, like
Right.
there are weekly options. So when you compress the time, they are less expensive. So that's what I mean when I said you could titrate it in. It's like when you're in chemistry class and you go drip, drip, drip. You could, if you're worried about what's going to happen this weekend, you could go buy an option, for the next 5 days, and that is your coverage. So if you were long corn and you're worried, oh boy, what if we drop 10 cents next week? You could go buy a put option literally for 3 or 4 cents that would protect against that possible collapse. So that's really all it is in a nutshell. Now the danger is you overtrade and you're always constantly do this. So there has to be kind of a sweet point between, defending your position and then just, kind of spinning your wheels. So that's what somebody with some experience can help you do, because it's very tempting to, you want to be involved every day. And I always tell my guys, take a longer term picture. When I do my weekly wraps, it's a 30,000 foot picture. I'm more concerned about where we are for the week or the month, because these day-to-day moves can really catch you off the wrong way.
Well, yeah, they're exhausting for one thing.
Yeah, absolutely.
So you got to keep the bigger picture in perspective here. The short-dated options, Chris, I love them around the USDA reports, because as you were saying, time is one of the 3 things that makes up the value of an option. And if you can use a weekly option around those USDA reports, you're paying for a minimal amount of time and you're getting some great protection.
Yeah, it's like if you have little kids and you're going to go to the beach for the day, you put sunscreen on for the day. You can do it for, literally just for the report if you want to. I mean, there are guys that do that all the time, and that's a strategy. Other people will have a longer term strategy, but that's the one saving grace is there are those choices out there for you. And what's the next USDA is going to be the August report. I'm old enough to remember, 10, 15 years ago, we had some really astoundingly volatile August reports. I can remember Orion Samuelson was on the radio once saying they should just get rid of this report completely. It's like it was some bearish report. And, the month later, we shrugged it off. But, the last thing we want, in the middle of August is to get gut punched by the USDA. And we are going to have that report. It is on the 12th. It's 15 business days from today. Personally,
it's going to be a gut punch.
Yeah, well, if you don't have, and then, to talk about these options, the option is your defense. Your option is you're putting your hands up so you don't get knocked out. And the nice thing about the USDA reports, when they're going to happen. And generally it's the report, but then about 2 days after the report too. So it used to be over and done with right on the report. Now, as time has gone on, it's 2 or 3 days. So if you just hedged around the reports, that's another strategy as well. And you can do that with the shorter dated options.
Gotcha. All right. What was the deal with bean oil today? Traded sharply lower, came back, closed off the lows. Bean oil, to me, Chris, acts like it does not want to go down.
No, it doesn't. And bean oil and canola, they're the 2 things the funds are record long. And those are both wrapped up in the whole D47 thing with the biofuels and what's going on with China, bringing that fuel in for biodiesel. So that's all. And that was interesting. You saw back in, I think it was, I'm just going to spitball it, but back in January, February, March, we were at 2 or 3 year lows, and then we turned the corner, and now we're at 2 year highs. So, I have guys that grow canola. I also, if you're a sunflower oil person, right, that's your hedge for those things. And so while we've got terrible markets in corn and beans, you've got canola and bean oil at 2 year highs, 18-month highs. So it's really giving you an opportunity. And like everything else, if that turns, you're going to want to hedge. And will it turn? I don't know. That seems to be well bid. And you're right. Every time we did have a little correction in bean oil, and we turn right around. And you're seeing there's a place where, the people that spend all day trading Bitcoin and gold and this, whatever they think's moving, there's interest now in canola and bean oil because why? It's at 2 year highs. It's moving. You're getting good volatility. So you see more people come into that. And again, there's a old expression, there's always a bull market somewhere. There's the bull market is in bean oil and canola. Will it last? Depends on what happens with crude oil. Crude oil has been all over the place in the past year for a million different reasons. Crude oil, a few months ago, we were down at $55, which is a 3-year low. We're now kind of trying to see if the $66 level is going to hold. Most oil producers, from what I understand, they really do better when crude oil is around $70, all the drillers and stuff like that. Yep. So that's all tied in there as well. But you would think, and I'm talk to guys all the time, that look at soybeans and the crush. Well, that crush, if you're that spread, if you buy the beans and you buy the oil and you sell the meal, that's sort of the spread that people in the financial community have had. So that's something to keep your eye on. I'm a big believer in that. And when that spread starts to turn, that will be the first sign that maybe the run's over in bean oil and canola. But absolutely, it's been, if you're looking for a bull market, it's canola and bean oil.
Man, you make a great point, and it's something that we need to remember is that the funds are always looking for the hottest market, the market that if it doesn't really matter which direction it's moving as long as it's moving.
Yeah, and look at cattle. They've been long cattle since COVID. I mean, they've made more money being long cattle, and so they're like a great white shark. All they do is swim and eat, and they go where the food is. And yeah, if you give them a reason to get involved, they will. And so that's a positive thing. So people say, what's the silver lining? The silver lining is they don't have a gigantic short position on really in any of the grains. 175,000 corn, they could buy that back in 4 days if they wanted to. Really, I've seen it happen. I've been on the other side when they're doing that. So they can flip. And the funds, they use options as well too. If you were short 170,000 contracts of corn, I think you'd have some call options on in case the market turned on you. So they're using the same thing too. And as you're a farmer producer, you've got to be aware of that. So use the same tools that they're using.
That's exactly right. Chris, great conversation, my friend. Thank you.
Thanks. Thank you, sir.
All right. That is Chris Robinson Ag Marketing here on Agri Talk. Good grief. We covered a lot of different issues there, but just some great insight, some great perspective on some of the basics of how these markets function. Boy, it's important to remember that even when you're getting bored to death and watching paint dry in the grains. Chris Robinson, thank you, buddy. Robinson Ag Marketing. Davis and I will be right back.
My heart was blinded. Love went astray.
Learn from the experts at Yield Academy in Rochester, Minnesota on August 21st. Use promo code AgriTalk for a 50% discount. Go to FarmJournalYieldAcademy.com.
That's a good one.
Wow.
That's a good
there you
one.
go.
Rest in peace, Ozzy. My goodness.
Yes.
Hard to believe. Well, no.
Is it?
The guy has been sick for a while.
He has, and
yeah,
by all
doesn't
accounts,
make it any less sad.
Lived a pretty hard life too.
Yeah,
I endeavored not to treat my body in such a way, with varying degrees of success. But yeah.
I got you. I got you.
Some good talks today.
Absolutely.
Some great
Absolutely.
talks. Okay, so we talked to the Breaking Barriers with R&D guys. Randy Dowdy, David Hula, about some pollination problems. We talked to Ken Ferry a couple days ago, was that last week, about some pollination problems. Matt Bennett, well, we're pollinated mostly in his area, but he's seeing some disease begin to crop up, as they say. Heat and humidity, the heat dome is here, spreading, going to be a thing. I got to think that any problems that are out there, the heat dome is just going to exacerbate. Fair statement?
No. It will not exacerbate the tar spot. Tar spot prefers cool.
Ooh. All right.
Okay. So the heat could maybe slow down the the spread of tar spot in the field. Maybe.
Okay. Yeah.
We ought to talk to somebody about that.
We should talk to more people about it. Yeah, absolutely.
Yeah, we ought to. So we're going to. Tomorrow morning, John Jones is the extension agronomist at the University of Illinois.
Okay.
He's going to be on ahead of the Farmer Forum, and we're going to talk about some of these issues.
Well, and we did get the message that came through early in the program today. Walk your fields. Get out there and have a look. Maybe now's a good time to do that. Maybe there's never a bad time to do that, but especially now that we've got so many reports coming in.
Yeah, and I
do.
If you haven't spent the time to figure out how to identify southern rust versus common rust, spend a little bit of time on that before you get out there. Because if you get out there and you find common rust, it's going to freak you out. Now, most of the hybrids out there are pretty tolerant to a common rust invasion. All right, they can handle it pretty well. That's not the case with southern. Southern rust can do a world of hurt to a corn crop, and it can be a surprise to you if you're not out there checking it. That's for sure.
If it's me, maybe while I'm out there, I've got my phone with me because I always do when I go out into the fields. And I just take a couple pictures. I see something. Well, that's interesting. Click, click, click. Let's get a couple. Make sure we get a good one, and then get you on the Google webs there, and maybe that can help your research just a little bit, get it figured out. Just a thought, everybody, trying to help here. The robots are watching trade, Chip. What did he mean by that? This is this is a little bit Markets 101. What did he mean by that, brother?
What he means is that the computer-based trading funds in particular are looking for signals that momentum is moving in one direction or the other. And when it picks up those signals through technical indicators, through keywords and news stories, through any of that stuff, they automatically trade. So the computers are listening. They automatically trade. And that is not, in my book, that is not a trading 101. That is, new wave post-pit type stuff. Because when the trade was in the pit and there was a human element involved in it, it took a little bit more effort. It really did, to create movement in a short period of time. But anymore it's kind of like an all or nothing, and right now it kind of feels like nothing.
Yeah, it really does. And just not much going there.
Hey, a couple of news items.
Bring it in.
That I've picked up. Coca-Cola, is not replacing high fructose corn syrup in its product. It's
at
not
all.
What it's going to do is introduce another cane sugar Coke that I don't think they know exactly what they're going to call it yet, but it'll be original Coke, something like that. But you made the comment earlier. We know what happens when you try to introduce new Coke. Yeah. Even if the new Coke might be the original Coke, people that drink Coke are so conditioned to the way it tastes right now, they will throw a fit if they can't get what they've got right now. And it's just like any other consumer. I'm not picking on, Coke users, or excuse me, Coke drinkers. There, I should have said it that way, not users. They'll throw an absolute fit if they can't get it.
Well, that's a good play. You can get the old kind, but you can try the new kind, and maybe the free market makes it all work out.
Exactly, and maybe they're just trying to make a run on some free promotion from the President of the United States. That could be it too.
Yeah.
Okay, Texas is rolling out New World screwworm fly baits, swarm lure. It's kind of a new effort out there that they are putting at play. Above normal temperatures, July 28 to August 1. We'll talk more about what's going on down in Texas tomorrow. Above normal temperatures, July 28 to August 1. Above normal precipitation in the northern plains and the western belt, basically from the Mississippi to the west. All right, we are talking corn conditions tomorrow. Extension agronomist John Jones, and we'll have a farmer forum right here on Agri Talk.